Hello and welcome to this session in which we will discuss the sales article of the Uniform Commercial Code known as the UCC. For short, I'm going to be calling this the UCC. It specifically deals with goods that are movable. Movable goods are goods that you can touch, you can see, and also you can move from one place to the other. For example, you cannot move a home, you cannot move a piece of land. You can move a vehicle, you can move furniture, you can move computers, and we'll discuss movable property a little bit more in details. Now, Article 2 of the UCC is similar, aligns with common law contract. So in the prior session, we had several sessions about common law contract principles. They are similar, but when they differ, we will discuss the difference. So in this session and in the next session, we will highlight the differences between common law contract and sales article of the UCC. So once you know the differences, if there's no difference, you assume they are the same. So we would highlight the differences. When issues aren't covered, it means they default back to common law rules. We're going to be discussing the UCC a little bit more in details. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today.
The first thing we want to define is what's movable personal property. I know I mentioned it briefly, but it's very important to kind of make sure we understand what this is. It defines all goods that we use basically on an everyday life, other than stuff that we cannot move. Vehicles, livestock, chairs, tables, clothing, grocery items, those are movable goods. Now, it's very important to explicitly exclude what's not covered. So this way we know what's specifically not covered. So if it's not covered under the UCC, it's covered under common law. So what's not covered are the following. They fall under common law. Contract for personal services. Services is different than physical goods. And real estate, as I told you, land, property, building. These services contracts deal with services by individuals like doctors, lawyers, those are services, accountant. And transaction involving real estate, like buying or selling a house or a land. That's one, that's not UCC. Contract for intangible personal property. This includes, what's intangible first of all? Intangibles are stuff you cannot see, you cannot touch. They don't have a physical form, like stocks, bonds, patent rights. Transaction involving these items are governed by common law contracts. So some of the questions on the CPA exam, you could easily eliminate once you know UCC rules don't apply and you know contract law applies. Also, contract for fixture. What are fixtures? Items that are attached to the land that become part of it. For example, built-in bookcase. I love built-in bookcases. When I want to buy my new home, I want to have a built-in bookcase. Heating system in a building that's attached to the building itself. The sale or lease of these items is governed by common law. Also under the UCC, we have to define the term merchants. We have to know who are merchants, and we're going to explain why we have to define this word. Under the UCC, rules for transaction differ based on whether the parties are merchants. What is merchants? Merchants are people that deals with the goods on regular basis. Those regularly dealing in goods being sold or having special expertise in them. For example, this individual here is a merchant. Whatever they are selling goods, and the assumption is if they deal in those goods, if they buy them and sell them, they are a market maker. Well, guess what? They are merchant. Identifying merchant, whether the person is a merchant or not, is key for applying the UCC provisions specific to transactions. Now, bear in mind, UCC covers all sales contract, not just those involving merchants. So when we say UCC, it doesn't mean it applies only to merchant. It applies to merchant and non-merchant. However, when it applies to merchant, we might have some specific rules we'll talk about. But bear in mind, it applies to everyone. It applies to everyone. For example, a car dealer sells a vehicle to an individual, which is a non-merchant. Well, in this case, the car dealer is considered a merchant because the car dealer, that's what they do. They buy and sell cars. That's what they do day in and day out. They deal with those type of goods and likely have specialized knowledge about cars. Let's assume, on the other hand, we have an individual just sells their used car, which is, it happens on every day, to another individual. Neither party is considered a merchant because they don't buy and sell cars on a regular basis, nor they have the specialized knowledge. Now, bear in mind, the UCC applies to both of these individuals. So the UCC, the sale of cars, is governed by UCC. So it highlighting its broad applicability of sales of goods, whether the person is a merchant or non-merchant. Now, when you are a merchant, we're going to see why do you have to be as a merchant. Also, under UCC, we have to act in good faith. Well, UCC mandate an obligation in good faith for all parties, whether you are a merchant or a non-merchant. You have to act in good faith. Now, we're going to learn what's good faith. These requirements mean that both buyer and seller act honestly and fairly in the execution of their contractual obligation. It means I am not trying to cheat you. That's what it means. I'm not trying to hide information that's relevant for the transaction. Now, for merchant sellers, now we have to be a little bit more specific. For merchant seller, they have to act in good faith. Everyone has to act in good faith. However, for merchant seller, they have to adhere to something we call reasonable standard of fair dealing. Now we have to define what's reasonable standard and fair dealing that are customary, that are normal in their specific trade, whatever that trade is in, car dealership, selling computers, selling clothing, whatever this is. This means that merchants are expected not to only act in good faith, because everyone should act in good faith, but also to conform to established norms and practices of fairness recognized in their industry. Now we're going to look at some principles of fairness, of fair dealing, but you have to understand what's a fair dealing is. Basically being honest, being transparent, so on and so forth. What is reasonable standards of fair dealing? Well, merchants should not deceive, mislead, or take undue advantage of the other party, because you have to understand that merchant, they are special. They are not special. They have a specialty in the subject matter, but although they have a specialty, they should not mislead or take undue advantage because they have a specialty. That's what we mean by fair dealing, because the assumption is if someone is a merchant, is a specialist, they know more than a normal person. They have to be transparent about their product, service quality, pricing, and terms of contract. And those norms are often unwritten, but they are widely understood and accepted within the industry. For example, fair competition, responsible marketing, you should not be lying, honoring warranties, providing after-sale service, and respecting customer rights. Those are fair dealing, should be expected from a merchant. So remember, we have to act in good faith and fair dealing. There's a dual expectation of merchant, in good faith and fair dealing. Why? Because we want to maintain trust and integrity in the commercial transaction. Why? It helps create a level playing field and it promotes transaction, it promotes economic activity, and this is what we want. We want people to buy and sell in good faith. Therefore, we have more buyers, more sellers. Therefore, we have more economic activities. Therefore, we are all better off. But we have to hold merchant at higher standards. Example: a consumer purchases a laptop from an electronic store. Well, electronic store is what? Is a merchant. So it's required under the UCC for that store to act in good faith, which include providing accurate information about the laptop features and capabilities. They have to act in good faith. Also, they must adhere to industry standard of fair dealing, which would involve offering a warranty, providing a clear instruction for return or exchange, ensuring the laptop is in or specified condition as agreed upon in the sale. Now let's compare and contrast that to an individual who sells their laptop to another individual. We have no merchants involved here. Here we don't have a merchant involved. Now they still have to act in good faith, such as being honest, representing the condition of the laptop in its best light. However, the seller is not held to the same standard of dealing as a merchant because they may not be able to explain what's exactly inside that computer. They know what it is, they know how to use it, but they may not know exactly what type of a CPU or a graphic card in that computer. So this distinction underscored the UCC emphasis on higher standard of conduct for merchants. Why? Because merchant, you might sell a car once a day. Car dealers, they may sell 50, 200, 1,000 a car per day. Therefore, we have to do what? We have to be honest in our dealing. And that's why we have to be honest, act in good faith, fair dealing. Let's discuss the creation of a contract offer and acceptance under UCC. Under common law, an offer typically requires consideration, which is something of value exchanged between the parties, to be considered irrevocable. That means you cannot withdraw that offer. However, for UCC, guess what? If we have a merchant firm offer, a merchant making a form which deviates from the common law, we don't need to give any consideration. So a merchant firm offer refers to a situation where certain offer made by merchant can become irrevocable even without consideration. What does that mean? This means that once a merchant makes an offer, they are bound to it for the duration specified in the offer. If no time duration is mentioned, they have to withhold it not to exceeding 3 months. It's irrevocable for a reasonable amount of time, and that's not exceeding 3 months. So if they promise to sell you something at a certain price, and they said they're willing to hold it for 10 days, under common law, well, guess what? They can change their mind, and there's nothing you can do under common law. Because under common law, what you have to do for the offer to stay valid, irrevocable, you have to give them some consideration so they can hold it for 10 days. Because otherwise, they don't have to do it under common law. Under UCC, if the person is a merchant and they make a firm offer, we're going to define what a firm offer is in a moment, then you don't have to give them a consideration to hold the firm offer. What is considered a firm offer? So what's that firm offer? What do we mean by a firm offer? That's important to understand. Well, to be classified as a merchant's firm offer, again, we're dealing with merchants. That's why we had to define what a merchant is. The seller must be a merchant. That's the first thing. It doesn't mean it cannot be, if it's your neighbor who's not dealing in these things, it doesn't apply. The person making the offer must be a merchant, which is defined as someone who deals with the goods on a regular basis. It's a market maker. The offer must be in writing, so they have to have it in writing and signed by the merchant. And this formalizes the offer and indicate the merchant's intention to be bound by it. And the offer must clearly state that it will remain offered for a specified time. This provides assurance in writing to the offeree that the offer will not be withdrawn during that time. You don't have to give money for that offer to be irrevocable. Once a merchant make a firm offer, it is firm. You don't have to pay them. Under the common law, what you have to do if someone makes, in quote, a firm offer, say, you know what? Here's $50. You keep that offer for me. How about that? Then they have to keep it open because you gave them consideration. Merchant, they don't have to do that. Merchant, as long as they make the offer. For example, I'll give you a quick example. A couple months ago, I wanted to buy a car. So I went to a dealership. We visited, my wife and I visited several dealerships. Then we wanted to buy a car from Toyota. What we did, we saw the car. We said, okay, would you hold it for 24 hours? And they said, yes, we will hold it. I said, okay, give me a written offer. So what they did, they printed out a paper saying, we will hold this offer for you the next 24 hours as long as you come back and get the car. I don't have to pay anything as long as that person, which is the person is Toyota, it's a merchant, made it in writing. They signed that offer and said, for example, we'll hold the offer for 24 hours. You can come back and we'll give you the car at this price. That's it. I don't have to pay them anything. If they say pay money to hold it, said I don't have to do that. You gave me this in writing, I will do it. Nevertheless, I was pretty sure I was going to buy the car. I made the payment. I made a small down payment, and within 24 hours, I came back and I purchased the car. The point is, I did not have to pay anything. But I paid anyway, because my wife wanted me to do that. Let's look at another example. A furniture store, a merchant providing a written and signed offer to a customer stating they will sell a specific sofa at a fixed price and guaranteed this price for 30 days. It's a merchant, written, signed offer. That's all what I need. I'll come back anytime and get that sofa in the next 30 days for this price. According to the UCC, this is a merchant's firm offer. The store cannot revoke this offer within 30 days, even if they receive a highest offer from another customer or decide not to longer sell the sofa at that price. Now, bear in mind, let's assume the same situation with my neighbor. My neighbor wanted to sell his sofa, and my neighbor said, you know what, you have 30 days, you take your time. The following day, I find out somebody pulled their van in their driveway, and they sold them the sofa. I came running out, hold on a second, didn't you promise? I was like, well, yeah, I did, but, I'm not a merchant. I don't have to, I can revoke this offer. So merchants can do that as long as they provide you what? A signed offer, a written signed offer specifying the time, the price, so on and so forth. So this rule provides a level of certainty and protection to the customer, which is especially important for commercial transaction, where planning and reliability are the key. The UCC deals with businesses. We want to create laws and rules that's going to facilitate business. That's what we want to do. Let's talk about acceptance. How can you accept an offer under UCC? Well, the means of acceptance is similar to the common law. What does that mean? It means if the offer does not specify how they want the acceptance to be made, it can be made in any reasonable manner. You can send them a letter, send them an email, call them, fax them, go into the store, okay? However, if the offer specifies a particular means of acceptance, I only accept by mail or written letter, then you must use that specific method. This is often referred to as the offer is the master of the offer. So they can tell you exactly how they want the offer to be. You have to comply. If they don't, then any reasonable manner is acceptable. If you remember, under common law, we looked at the mirror image rule. Well, let's talk about the mirror image rule for the UCC. Unlike common law, where the terms of an acceptance must exactly match those of the offer to create a binding contract, under the UCC does not strictly adhere to this mirror image rule. And if you look at my mirror image rule under common law, I have someone standing in front of the mirror, and the person is exactly 100% showing on the other side. Now notice here, they don't look the same, right? So just to kind of indicate it's unlike common law. Under the UCC, an acceptance can still be valid even if it includes terms that are new or different from those in the offer. Now let's define what's new or different. Generally, if an acceptance includes new or different terms, these terms are disregarded unless the contract is between merchant. Merchant means what? Business or individual recognized as expert in the trade. So when we say, the mirror image rule don't apply, it does not apply between merchant. In a contract between merchant, the terms and the acceptance will usually govern unless the original offer promptly object to the changes or the changes materially alter the contract. Now you can say, this is my offer, you cannot change it. Then you cannot change it. Or the changes that's being made are material. In other words, minor changes between merchants are acceptable. Again, why? Because we want to facilitate trade. We don't want to keep going back and forth every time a seller or a buyer, a merchant make a minor change. We'll have to go back and renegotiate. What we're saying, minor changes are acceptable unless the contract initially says no minor changes. It's either that exactly or nothing. Under common law, you can't have that. Under common law, once you make a change, you have a new contract. That's it. The old one is gone. It has to be mirror image, not under UCC, if it's between merchants, and we know what merchants are. Example, imagine a business offering to sell 100 units of a product to another business, also a merchant, for a specified time. The second business sent the acceptance but add the terms that the good must be delivered within 30 days. So they made a change because they did not accept the original offer because they changed the terms. They want it to be delivered within 30 days. Under common law, this would be considered a counter offer, and we have a new offer. We have to wait until the other party accept. Here, it's an acceptance because you don't have to accept the mirror image under the original contract. So under UCC, this is a valid acceptance. We're good because we're both merchant, and we're just, this new 30-day delivery will become part of the contract unless the first business says, you know what? object to the new terms, or if the terms is considered materially changing the offer. So either the business can object or say, right from the get-go, I don't accept any changes, or that 30 days is considered material. Now, what's considered material? Depending on the industry in which you are operating. Again, this flexibility acknowledges the dynamic nature of commercial transaction. We want to facilitate. We want to make business easy for the party, especially between merchants, so we keep the economy running. That's why we accept those terms. Valid acceptance: when an offer to buy goods is made with the expectation of current or prompt shipment. What is current or prompt shipments? It means the buyer expects the seller to ship the goods either immediately or within a very short period of time. The seller has two options. If that's the case, you can call, say, I promise to ship, or the seller can verbally do it, or in writing promise to ship, or better off, you can physically start the shipping. So this will constitute what's called a valid acceptance. Valid acceptance means if I ship it, I accept it. This rules apply unless the offer explicitly requires a specific mode of acceptance. Simply put, if I receive an offer and I ship the goods, I accept it. That's it. Example: suppose Maria, a restaurant owner, emails a supplier, Fresh Produce, ordering 100 kilograms of tomatoes, indicating that she needs them for prompt delivery due for an upcoming event. Under the UCC, how can Fresh Produce accept this offer? They can accept by sending Maria an email or a written confirmation saying they will ship the tomatoes, promising to ship, or they can actually start the shipping process by sending the tomatoes to Maria, prompt shipment. Now, given this example, when I was 18 years old, one of my first jobs when I was in high school was actually delivering produce, and we used to get those orders from a restaurant. The restaurant calls, look, we need tomatoes, we need cucumbers, we need lettuce, whatever we need. I would get into a van and just drive those over there. That's it. Acceptance. We accepted the offer. This flexibility in the mode of acceptance under the UCC accommodate various business practices and help facilitate smoother commercial transaction. In the restaurant, that's very important. They want those burger buns, they want the tomatoes, they want the produce. You gotta deliver quickly. So the seller can choose the most convenient or efficient method of acceptance, ensuring that the needs of both parties are promptly addressed. Let's kind of change the scenario a little bit. If the seller responds to an offer by shipping goods, this acts constitute an acceptance of the offer. We talked about this, right? They order tomatoes, we deliver tomatoes, we accepted the goods. However, if the goods shipped do not conform to the specification of the contract, it means we did not ship them the tomatoes, or the tomatoes were rotten. This action is considered both an acceptance of the contract and a breach of contract. So what we did is we accepted your offer, but we also breached the contract. Let's assume we sent in cucumbers rather than tomatoes, or the tomatoes were not of the quality or the specification that they wanted. It's a breach of contract. Let's take a look at this example. ABC Schools ordered 50 laptops with specific technical specification from a supplier, TechGears. Well, due to inventory issues, TechGear ships 50 laptops that do not meet the ordered specification. Yeah, perhaps those computers have less storage or different processors than what they agreed upon. In this case, TechGear shipment of these non-conforming, it means they are in breach of contract, would be both an acceptance of ABC Schools' offer, they accepted the offer, and a breach of contract because the shipped laptop don't match the contract terms. Well, as a result, ABC is entitled to take legal action against the supplier, TechGears, for damages arising from this breach, and this could include additional cost to purchase the correct laptop from another supplier, or the losses they suffer because there was delays in getting those laptops. This aspect of the UCC aim to hold the seller accountable for fulfilling their contractual obligation precisely. So if they order the tomatoes and you send them lettuce, say, well, you're a restaurant, you need lettuce. No, I need tomatoes, send me the tomatoes. And ensuring that buyers receive exactly what they have agreed to purchase. Let's talk about counteroffer. There's a specific provision for situation when the seller ships non-conforming goods, but listen to me, but clearly communicate to the buyer that these goods are sent as accommodation. And remember, I used to do this. I told you I used to deliver produce to a supplier of produce. Yes, indeed, this is a real story. Sometimes what they would do, they will ask for tomatoes, we'll give them the tomatoes, and we'll add lettuce. Say, look, This is an accommodation. If you accept, that's fine. Accept those lettuce. In such cases, the shipment does not constitute an acceptance of the original offer, but instead is treated as a counteroffer. Or they order tomatoes. We don't have the large tomatoes. We have those small mini tomatoes. We can send it to them. Look, we don't have the original one. That's what we have. Would you consider this as an accommodation? Now here the buyer has the option to accept or reject the counteroffer. If they want those tomatoes, that's fine. If not, then they don't have to accept them. There are different types of tomatoes. We don't have the exact tomatoes. This is what we have. But listen, we know we did not send you the right tomatoes. Would you accept this as an accommodation? Would you accept this as an accommodation? Let's assume bookshop readers have an order 100 copies of a specific edition of a novel from a distributor, Bookworld. The Bookworld don't have the specific edition. Instead, they send an email explaining that they can provide a different edition of the same novel as an immediate alternative, but this would be only an accommodation, like a counteroffer. So along with this email, Bookworld ships the alternative edition to the bookshop. In this case, Bookworld shipment of the alternative edition plus the email does not count as an acceptance of the original offer. Instead, it's a counteroffer. It's a counteroffer. Readers can choose to accept or reject the offer of the different novel. They can, because it's just a counteroffer. Since Bookworld clearly communicate this shipment is an accommodation, there's no breach of contract on their part. Okay? This provision allowed the flexibility in business transaction, enabling seller to offer alternative solution without the risk of what? Breaching the contract, while also giving the buyer a choice to accept or reject the alternative. Let's talk about consideration, because we talked about consideration in common law. In common law, we said a change to the contract, known as modification, require consideration to be enforceable. We talked about this. If you want to change something in the contract, change the due date, change the amount, change the terms. If you want to change and the seller accept, you have to give them some consideration for the change to be valid. Under the UCC, a contract modification does not need new consideration to be enforceable, provided that the modification is done in good faith. Again, what is good faith? It means it's done because of specific circumstances that they are beyond my control. Good faith. I'm not trying to cheat you, but that's what I can do now. Okay? I want this change. An example. A company contracts to buy 100 unit of product at $10 per unit. Later, the seller experiences unexpected supply issues and they cannot fulfill the order at the agreed price. The seller and the buyers agree to modify the contract, increasing the price to $10.50. Now, under common law, this modification would require additional consideration from the buyer, such as agreeing to buy more units. For example, if you want to buy more units, I can do that. Under the UCC, this modification is enforceable without any additional consideration, as long as both parties act in good faith. What does that mean? It means the seller genuinely cannot meet the original contract. There's supply problem. I need to pay a little bit more, therefore I have to sell it to you at a little bit more. I'm not only seeking profit. If I'm only seeking profit, that's bad faith, because we agreed for $10, but I have to change it to $10.50. Why? I could not secure what you need at this price. It's unforeseen difficulties, beyond my control. It has to be done in good faith. Now, what's good faith? Well, if we disagree, we'll go to the court. But if it's done in good faith, we're good. Let's talk about payment. In sales contract, payment can typically be made using a check, and that's the best way to do it because you have track. However, the seller specifies that they want payment in cash. Well, guess what? Then they are obliged to allow the buyer a reasonable amount of time to arrange the cash payment. If we said we don't want check, we want cash, well, cash is not readily available. You have to go to the bank. Sometimes if it's a large amount, you have to give the bank a few days. For example, if you want to withdraw $30,000-$40,000, you cannot just walk into a bank, say, I want to withdraw this amount. They're going to ask you to come back in a few days. We don't have this amount. Sometimes they may need a week, depending on how large is your bank and if they deal with those large amounts. So a buyer agrees to purchase a car for $10,000. Initially, the buyer plans to pay with cash. However, the seller, preferring an immediate clearance, requests a cash payment instead. But in that case, okay, if you want the cash, you have to give me a few days so I can arrange the cash with my bank, assuming you have the money at the bank. What constitutes a reasonable time can vary depending on the circumstances, such as the buyer's access to the required cash and the usual practice in such transaction. Again, this flexibility is designed to accommodate both parties, the buyer need time and the seller preference for cash transaction. Let's take a look at this multiple choice questions from Farhat Lectures. Under the UCC, which factor is not required for the enforcement of a contract modification? There's 1 not required, and 3 are required. So you're better off looking at the 3 that are required. Okay, do we have to have good faith in the modification of the contract? We always want to have good faith. Therefore, that is required. A is incorrect. Do we need a mutual agreement of the parties? D. Of course, you want to make a modification between two parties. You cannot have a modification, a unilateral modification, and the other party don't agree to it. D is out. We're between B and C. Does the modification has to be in written agreement, or does the modification need additional consideration? Well, how about written agreement? Well, it's good to have written agreement. It's not required, but it's good. It's good practice. How about B, additional consideration? Under UCC, do you need to have additional consideration for contract modification? And the answer is no. You don't need additional consideration. Therefore, it's not required. Under common law, any contract modification, you need additional consideration for that modification to be enforceable. Under UCC, you don't need it. Written agreement, again, it could be yes or no. Therefore, the answer is B as in boy. What should you do now? You're going to go to Farhat Lectures, look at additional MCQs. That's going to help you, whether you are studying for your CPA exam or you are taking this as a college course. Good luck, study hard, stay safe, invest in yourself. The CPA exam is worth it, and stay safe.